It is not news anymore that it's the long-term holders that are causing the current bear market. The long-term holders are taking profit, they are selling into falling prices, and that's actually quite different to prior cycles. Now, I don't like that difference. Have a look at the data. This is the long-term holder sell-side risk ratio. Let's just have a look at the color-coded Bitcoin price chart and check out when the long-term holders tended to sell in the past. It tended to be when Bitcoin hit new all-time highs. That was true in 2017. It was also true in 2021. And we also saw it twice in the last 2 years. Again, when Bitcoin hit new all-time highs at 70K and at 100K. But now, for the first time, the long-term holders are selling into falling prices. So in the past, the sell pressure just came from portfolio rebalancing, right? You might have started with, say, 10% of your net worth in Bitcoin, then Bitcoin doubles and triples and quadruples. Suddenly, you've got 30, 40% of all your money in Bitcoin, and you're just rebalancing, right? That's what happened in the past. This time, the long-term holders are selling without having that much more exposure. They are selling when the price is coming down. There's a different reason for the selling now compared to prior cycles. Have a look at the realized profit to loss ratio. During a bear market, people are realizing their losses and we have turned negative again. And the big question is, are we going to bounce again? As we did for the correction from 72K to 53K and from 100K down to 80K. Now, who is realizing losses here? It's the short-term holders. They are realizing losses at magnitudes we have barely seen in the past. The long-term holders, they are realizing profit. So there's all this profit taking by the long-term holders, but at the same time, the short-term holders are panicking at a level we haven't seen before. So there seems to be a general change in conviction in the market. The long-term holders are selling without having new all-time highs. The short-term holders are selling much quicker and realizing losses much quicker than we've ever seen in the past. All market participants are currently panic selling. It's the long-term holders dumping on the short-term holders. There's only very few long-term holders that have to realize losses. Really, the losses are all with the short-term holders. And so this might just be the beginning. Because really, if we are about to enter a bear market, then the long-term holders will have to realize losses as well. The long-term holder loss realization is close to zero still. And so there are basically two ways to approach any market. The first way is to just try to allocate towards the asset, have a very long time horizon, because then time can bail us out, right? Most assets tend to trend up over the long term, especially Bitcoin. And so even if we don't time the market perfectly, we can still make money. Now, the second approach is to try to outsmart the market, right? We are not making money just by the adoption of the asset or by the devaluation of the US dollar. We are making money because we can estimate where the price will go better than the average investor. So we can only outperform by being better than the average market participant. If you don't want to stress too much about it, you can simply just allocate towards Bitcoin regularly. You can buy, say, $1,000 every month, and you can extend your time horizon beyond a cycle. So let's say 6 years. And if you buy in regularly, right? So that's this linear line here in turquoise. If you buy in regularly, you tend to make long-term returns, even if there's a bear market in between. So this is a dollar cost average example, $74,000 invested over the course of 6 years, $1,000 every month. That would have turned into $261,000. So more than $250,000 within 6 years with an allocation that's very much doable for many people. This is a very common approach for other asset classes, right? There are 401ks, retirement accounts, where you dollar cost average into a stock market index, or there's also property, right? Where people take on massive amounts of debt and then they pay this off every month. So for most long-term investments, people are already dollar cost averaging in. It's not as common for crypto, it's not as common for Bitcoin, but Bitcoin still is a very scarce asset. If the time horizon is long enough, and it probably has to be shorter compared to traditional finance assets, say compared to gold or property or stocks, if the time horizon is just 6 years, then the likelihood of making money in Bitcoin using dollar cost averaging is very high. But you're probably not watching just to allocate and forget. You're also getting into the market with the intention to outperform. Now have a look at the unrealized profit of the short-term holders in red and the entire market in green. There's no more unrealized profit for the short-term holders. They're now only realizing losses. But the entire market is still in unrealized profit. But that tended to shrink quite a bit in prior bear markets. So it went from 237 billion down to 1/10 of that. It then went from 800 billion down to 1/5 of that, so a drop of 80%. And this time we are at 1.3 trillion. Maybe we won't fall by 90% or by 80%, but even if we were to fall by 70%, we've still some way to go. Here's the unrealized profit to loss ratio for when the market is in aggregate in unrealized losses. When most people see red in their portfolios, that's the best time to buy. We are not there yet. Long-term holders have an average cost basis of $36,000. And in prior bear markets, we tended to go below that. So that was in 2015 when Mt. Gox and Silk Road collapsed. That was also in 2019 when we had the ICO bubble busting. It was also true in 2022 when we had the Terra Luna and FTX collapse. Right now, we don't have a real narrative what's causing the sell pressure. But I wouldn't be so surprised if we do get that narrative rather sooner than later. We did get a lot of institutions blowing up after Terra Luna. 3 Arrows Capital, for example. On the 10th of October, we had a lot of liquidations due to the flash crash in the perpetual futures market. That might have triggered some institutional collapses as well that we don't know of yet. The funding rates on the perpetual futures definitely aren't as positive anymore as they used to be for many assets. And that's hinting towards some market makers having exited the business. But we haven't yet gotten a public announcement. Have a look at the supply that's in profit. When the majority of supply is in losses, so when this falls below 50%, it's historically the best time to buy. We are not yet below 50%, we're currently at 65%. Short-term holder supply is in losses, no surprise here. And long-term holder supply is still 83% in profit. And the long-term holder supply actually doesn't bottom at below 50%. It tends to bottom at around 55%. So the majority of long-term holders tend to be in profit even at the end of a bear market. That's how long your time horizon has to be, right? It has to be longer than a single cycle. Again, supporting the dollar cost average argument that it should be at least 6 years. 3 years might not be enough. Of course, the last 3 years were bullish, but if we start dollar cost averaging now and then we don't continue throughout a bear market, then it's impossible to recover, right? This needs to be a plan that has to be thoroughly followed. That's also the way how I made my first serious money in crypto. I just started to dollar cost average into Bitcoin. So I did this after we had already seen quite a bit of a correction in 2018. I bought at around $7,000 in summer of 2018, and I bought a little bit every single month, and I continued to buy, and then I stopped buying when we hit the prior all-time high, and I was just looking for the next exit opportunity, and I did successfully sell very close to 60K in spring of 2021. And it's really the purchases that you make during the bear market that make all the difference, right? A $3,500 investment made roughly a 15x at the time of sale. And while the returns might be diminishing, the concept of course still prevails, right? If we have a long-term positive outlook on Bitcoin, we can just allocate. If the price goes down, that's fine. We can buy even more Bitcoin. The price goes up, that's also fine. We can tell us a story that we are now making profit. So we pretty much become agnostic to the price development. If things go up, we are happy. If things go down, we are happy because we've got a long-term time horizon. Have a look at the supply that's currently held in profit and loss. At the same time, we also have the split up between the short-term holders and the long-term holders. So the long-term holders are in blue, the short-term holders are in red. The darker color means profit. The lighter color means loss. When short-term holders dominate the supply, that's when a bull market tends to peak. When long-term holders are in losses, that's when a bear market tends to end. We can also normalize this chart to 100%. Then it becomes a bit clearer what's currently going on. And we are just starting with the long-term holders getting into losses. Really, the vast majority of long-term holders are still in profit. Here's another way to look at the wealth of the long-term holders. When the unrealized loss of the long-term holders is close to 60%, or when the price is below the long-term holder average cost basis, that's the best time to get in. And we are just starting that journey right now. This market so far has only been painful for the short-term trader. It has not been painful at all for the long-term investor yet. And long-term investors are aware of cycles. And that's why they are now selling. They are selling despite not having hit new all-time highs. If you got some value out of this video, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. A link to Premium pops up here on the screen. I share my own trades over there. We are currently making money during that bear market. See you next time and thanks for watching. Cheers.